Great. So welcome everyone and thanks for joining us. Looks like we'll go ahead and get started. This webinar is about helping you understand and protect one of the most important assets you own, your house. Joining us today is five-time best-selling author, Jeff Arnold, and he's going to provide some insights from his book, How to Beat Your Insurance Company. Jeff is also the founder of North America's most awarded insurance firm, RIGHTSURE Insurance. Jeff, let me go ahead and turn it over to you.
Fantastic. Well, hello, good morning, everyone. Super excited, as always, to join these and transfer knowledge, especially in these current times when home insurance is becoming more and more difficult to obtain for a lot of consumers. Hey, this will be probably a 15 to 22-ish minute session, so no worries. You're gonna get a lot of information, rapid fire. I talk very fast, but we can always send you a copy of this and you can slow it down. But I'm excited you're here. Looking forward to diving into this. Briefly on your screen are what we're going to cover today. So if your insurance company dropped you, now what? It's a pandemic. It's happening everywhere. We want to transfer some knowledge to our visitors and our listeners, right? And that's really to teach you the 4 ways risk is handled in North America. We'll talk briefly about some home coverages and then home selections, just so you know when you are buying home insurance, it being the most people's largest asset, how to insure it right. And that is not trusting the insurance company, not trusting your loan officer or your realtor, right? We'll just look at a quick snapshot of premiums from a client year by year. We'll give you some free links. Talk 2 seconds or so about some of my books, if you have any questions there. And then we'll send you a link. If only it makes sense to you, we're happy to take a look at any questions you have about your personal home insurance policy. We don't typically discuss those in these sessions. So let's dive in. So in North America, right? So think where we're at now. There are really 4 ways to handle risk. This has a lot to do with your home insurance, and this is why I wanted to throw this slide in there, right? So the 4 ways are risk transfer. That means simply you can transfer this risk to another party, an insurance company, for a small premium, right? So for literally pennies on the dollar, an insurance company will stand behind you with millions of dollars in coverages, right? Risk avoidance, and that is you just don't buy a home or a car or start a business, so you just avoid risk altogether. It's another way to handle risk. There's risk retention, and you already engage in a little of that when you risk transfer. So when you buy a policy from an insurance company, transfer that risk, you engage in risk retention because you are self-insuring or have a deductible, which means you've got some skin in the game too. And generally, the more risk retention you take, the lower the premium. And then, of course, you can add some risk financing, which means that you'll take a lot more of the risk and go for a very, very large high deductible. So those 4 descriptions are very important when we talk about home insurance in North America. The way we mostly handle it is risk transfer. We transfer that risk to a third party called an insurance company, and that then creates what's called a legal contract, right? So when you're buying insurance, you're really buying a legal contract and agreement with that company. So wanted to take some time there, let you know those 4 ways and understand that what we're focusing on now is the risk transfer, right? You're trying to seek an insurance company to protect a home that may have been canceled by someone, or they've dropped you, or no one's writing insurance in your state, or you're in a fire zone, or what have you, right? We're talking about risk transfer and risk retention. Risk retention is important in there because even though you're going to be able to transfer some risk to an insurance company still, your retention is going to get a lot larger. So in the past, it may have been $500 or $1,000 deductible. Many times now they're $5,000 minimum on these deductibles. So just be aware that that's one of the other nuances happening there. One of the greatest mistakes that people make when they're buying home insurance, hazard insurance, is assuming that all policies are the same and they're only differentiated by price or premium. The insurance, like anything else you buy, you get what you pay for. And unfortunately, what's so odd in this industry or the insurance industry is people think that everything's the same and it's just based upon price. Well, most home insurance policies have 6 functions to the primary coverage. The reason I want to tell you about this slide is if you see A, B, C, D, E, and F, right? So your dwelling, structure, property, loss of use, liability, medical payments. B through F is what matters to you. A is really all your loan officer or mortgage broker or bank really care about. And so what happens is a lot of times you get steered by third parties into something just about coverage A, and coverage B through F is not even thought about until claims time. The reason I talk about it is because although I love to help people beat the insurance companies, a lot of times if you buy the wrong policy based upon bad direction or just trying to save money, then we're going to get what you paid for, right? You're going to get a really bad claims experience or one of those no coverage declination letters. And that's very, very frustrating to you, to me, to anyone that experiences it. So if you will look along this bottom slide here, this is just some companies that my firm RIGHTSURE represents in 42 states. You've probably heard of Safeco, Progressive, Travelers, and Lemonade. All things being equal, these are what their standard quote policies have as far as limits. The reason this matters for this masterclass is you can see just going around on the very top line alone for money, banknotes, or coins, the restrictions, the limitations, the lower limits in some companies versus the other. And then if we were just to go down to the last line to make it easy, loss of silverware or gold-plated ware or pewterware, you'll also see the varying limit difference, right, based upon company. So I put that in there because, again, most consumers mistakenly think that everything's the same. Every insurance legal contract they're buying is the same. It's all based upon price, and just not true. They're as different as night and day. So just want to drive that message home. And before we leave this slide, the coverage A that we spoke about, that's the amount of your dwelling. Again, all those B through F have different limits. And if you are just purchasing based upon a recommendation of a third party, again, love realtors and love mortgage brokers, but they're not so concerned with B through F for you. They're concerned with A. And so what happens a lot of times is people just satisfy the mortgage, but have really, really poor coverage underneath. And it's just important that you know that. We could spend forever diving into that, but just to be aware. This next document is it's a coverage disclosure form that most reputable firms should be using. It's to help you understand. Again, if you harken back to the last slide, I hit you 3 times with you only get what you pay for, and all of them are different based upon the contract language, not just the price. There also exist parts of a home insurance policy that if you don't tell them about or they find out after, that you're not going to get coverage for. There's also additional selective optional coverages that you can add to a home insurance policy. And the reason this is so important is after 31 years in this business, I can tell you that everyone hates to find this out post-claim. They would rather know this knowledge in front of the claim. And so let's just go really quickly through these kind of line by line. I'll skip around a little, but just any has limited limits, right? Coverage amounts on guns, paintings, jewelry, antiques, any of that. A lot of people think if I have $300,000 of liability, that I'm covered for that. That has nothing to do with your scheduled personal property. The next is for business pursuits. If you don't tell a company about a business and you operate a business out of your home, someone gets hurt, Not only is there no coverage, there's no defense coverage, right? So they're not even going to defend you because of a fraud or misrepresentation on the application. Very, very important. This next one's a personal favorite that we won't even sell a policy in my firm RightSure anymore without it, because it's anywhere from $3 to $7 a month. And the worst way to find out that you don't have sewage and water backup is to have family over at Thanksgiving and have your toilets or tubs back up with all kinds of waste. That's not the time to find out. It's But of course, flood insurance is completely separate. Federal government did a great job of letting people know that's not covered in home insurance. Umbrella, we'll skip that. That's just coverage over the top of your auto and your home. It's important, helps you tie all the policies together, so there's very little exclusion opportunities on the company, and also provides you with defense dollars, which if you're sued is important. I'm going to skip down to trampolines now. Again, if you have a trampoline on your home, don't tell an insurance company. Some little child gets hurt or worse, paralyzed. Easy for them to exclude it because of your misrepresentation. Is there a fee for it? Yeah, most companies charge about $40 a year, $3 a month. So if you have a trampoline, again, you just don't want to misrepresent that. Same for diving boards and pools. I think everyone knows that. They also need to be fenced in based upon ordinance. Animal exclusions, getting some relief from pet places for Arizona and other states that have animal-friendly type language where that they can exclude unless it has a bite history, but just important to know. And then if it's you're renting it out to Airbnb or something, or you're not in there for half the year, but you're listing it as your primary place where you live, and there's a claim and they show that it's vacant, it's another way for companies to get off those risks. So the last three, of course, easy, simple. Solar panels, got them, kind of need to know about them. Got to get coverage for that. Any equipment breakdown if you want it. And then service lines or buried utility lines. That's pretty self-explanatory. Any buried utility line that's covered there, once it leaves the home, you're probably responsible for until it hits the street. If you don't select that on your home insurance, it's not going to be covered. Again, get what you pay for. We have to help people understand that they're not all the same. So want to talk about this slide because I indicated at the top, that most people think that all insurance is the same, just based upon price. And then also, can't remember if I stated, but you are going to surrender an insane amount of money in your lifetime to insurance companies. So it'd be nice to know, what you're getting. And so this is a snapshot of one of our clients that's been with us for 30-something years, but this is 24 years of a snapshot. They have multiple children and some toys. But just to give you an idea, this is not an above average client. This is not a client that is any different than you or I. Maybe the total premiums get a little higher, but if you can see from 2015 to 2018 there on the auto column, they had some young drivers graduate to driving age, and the premiums go way up. You can see in the second column just the change in home insurance premiums over the year, right? It just vacillates, it fluctuates. Companies have bad years, they raise rates. Companies have good years, they lower rates because they still need your premium. They need to be competitive. So it's just a good representative sample. The next one's umbrella coverages, right? The varying differences in prices over the years in umbrella coverage. You will see 2006 to 2011. There's a great reason in that umbrella coverage spike for this client. It was the great reset, or whatever you want to call it, and insurance companies weren't making any investment income. The only way they could get money in to pay claims was through premiums. And so what did they all do? They all raised rates. That's what you're seeing in home insurance right now. So if you go back to the home insurance column there, you'll see this client's enduring some major increases, much like you've probably endured these years, because insurance companies just aren't making any money at it, and the investment income hasn't been there to offset it. So just some pieces there. Just continuing this, an RV was acquired, and so many people have recreational vehicles. Okay, so if in fact, you're here or watching this masterclass on home insurance and you've been canceled because the company's either left your state or they've told you you live in a fire zone or a flood zone and you're just practically uninsurable. Good news, we can help the folks at RIGHTSURE, my firm. We're licensed in 42 states. There are a lot of hidden discounts in insurance, and if we rely on just the technology, that program for agents to use, it just can't calculate them all. So you have to know the ins and outs. And so one of the things we'll do is a discount discovery, right? I talk about insurance in a lot of my books. We'll send you a link for that. But even in the meditations book, I just wanted to post 2 quotes because I can never stop talking about insurance. Right? So one is a repeat of things I've said. Caveat emptor, right? Let the buyer beware. In the world of legal contracts, what you call insurance, you get what you pay for, right? So we tell people, buy the agent, not the insurance. And a wonderful thing on that next one is, quote, is most people never pause to consider how much they're paying for all types of insurance over their lifetime, which is why we showed you that graph, right, of a typical client, kind of a middle of the road client. We have people that pay more, people that pay less, but when you see you'll pay hundreds of thousands over your lifetime, it makes sense to understand what you're buying by the agent, not the insurance, and don't just buy on price alone. One last final slide here for your home insurance and why it's important. I mixed this into the last because I didn't want it to all be about insurance tables and slides and have some engagement with everyone, right? But this is important. This is a quote comparison form that you would want to press up, take a snapshot of this. If you want a copy, email us at the link sent. But you want to take your current policy and you want to lay it over any other one that you quote. And if your goal is just to save money and retain more of the risk and be more self-insured, fantastic. At least just know what you're buying. And that's what this is for. It allows people to see what we would be quoting and then what your competitor would be quoting or what you have. I would submit to you with absolute certainty, very little doubt in my mind, that everything in red now, great chance that you probably don't have those coverages anyway. If you didn't have a good agent or were just focusing around based upon price. So that should at least be a wake-up call. Scare anyone about how to protect your most important asset correctly, right? One thing we didn't really talk about in this session because it's about home insurance, but there's a wonderful thing about life insurance, and everyone loathes the life insurance salesman. We really don't do life insurance. We help people transfer wealth to next generations. So my book, Money Secrets, again, another plug, is one of the great things we help people with is not only life insurance and transferring wealth tax-free, but if they want, they can get all those premiums back in their own lifetime, right? So it's really a lot of cool things when you think about the legal contract of life insurance, and not as an investment, but as a wealth transfer or a return of money piece. Just something to think about. Again, I love this industry. I write a lot about it. How to Beat Your Insurance Company is a really, really easy read, but we're also happy to help you along the way with any of our folks at RightSure. Again, the link is in the chat. If you have questions, just fill it out. One of our famously friendly humans will be with you right away, and then we'll begin a conversation and try to help you get some home insurance. So thank you so much for joining us.